Hey guys, welcome back to the channel. Today we're talking about why a rival stock annoys me so much. Apart from the obvious, we're going to be delving into some of the other reasons why this stock and potentially why this company annoys me so much. Even though I'm a shareholder in the company, there are certain things that I'm looking at that I'm just like, why are they doing that? Why now? What's going on? So if that sounds like something you're interested in today, guys, do please smash that like button, consider subscribing to that channel, and we'll get in there and we'll check it out. Hey guys, welcome into the video. So here we are on the landing page. The most annoying thing first, single-handedly, is obviously the decline in the share price and the market cap over the last year or so. We've gone from $28 a share all the way down to $4 a share, which is a huge downgrade in the share price. Make no doubt about it. This is in line with the rest of the EV sector though, so there are some other reasons for that, especially as it's a pre-revenue company. The market state at the moment, there are some logical reasons for this, but the things that annoy me and concern me most is that this share price has declined so quickly, and yet they haven't got a vehicle to production yet, despite having tons and tons of capital and investment to do so. They're actually spending an awful lot of money at the moment. Capex per quarter and per year is absolutely flying along, and that is single-handedly obviously really annoying as a shareholder. And the reason the capex is so high is because they're so busy trying to develop a van, a bus, a car, and numerous other things all at the same time. Instead of selecting one thing to bring to the market, i.e. the van, which they actually have over 10,000 orders and investment from UPS for, and then an option for another 10,000. Instead of getting this going, they're busy trying to get the bus online as well, developing a car with Uber, and then we have, which is seen here, this is all costing money, developing extra digital products, working with charge cars, working with robo race. All of this is taking capital away, and they're having to pay people to do this all the time. So not only are they revolutionising the way that we build cars, which is through the microfactory, which is innovative in itself, electric vehicles are also innovative. So they're being hit by three different fronts that is going to cost capital to do so. And then this is what happens from it. They have to raise extra capital each time to do that, when if they'd have just focused on just getting the van or the bus, or just the van and the bus to production and getting the microfactories going, they could have mitigated some of that and kept some value in the share price. The share price is now down to a measly $4 a share. So when they come to raise capital again, if and when they do come to do that, I do appreciate that they've got some capital on hand. It's going to be really hard they're going to have to sell even more shares to make a significant amount of money, because the share price is only at $4 and it's basically never been lower. And the reason for this is like they're focusing on developing the car. Now eventually this may come through to fruition. I could be completely wrong, but in my opinion, I think that it would have been better to just focus on the bus and the van and get the microfactories working for that, and get this thing to mass production and start fulfilling that UPS order that is worth an enormous amount of money. Get that revenue and the share price, and get vehicles to production, and the share price will stabilise and even go up, and it'll be easier to raise capital that way. At the moment they seem to be spreading themselves a bit too thin on the ground and trying to invest limited capital into loads of different projects, when really they should be laser focused on just doing one thing, or one thing extremely well. They've got pre-orders, they've got investment from companies specifically for van and buses, and especially the van from UPS. So why not satisfy a bit earlier that side of things? I know that they've got a lot of employees, and that is really good as well, and they do have to get the intellectual property and the most talented people. I do completely understand that, and they are getting some factories online, but that has to happen. They're at the point where they've pushed it right up to the brink really, in terms of the capital that they have available to achieve what they've got, and they have already, as I've mentioned in previous videos, scaled back their expectations for 2022, despite the fact that vehicles are still going into production. I just think if they hadn't spread themselves so thin, they would have been able to do this a bit quicker, and that would in turn impact the share price. So we still have all these types, but people are watching Q4 or Q4 for 2021 and Q1 for 2022 very, very, very closely, because if this company fails to deliver on that, there's going to be no increase in the share price. It could even dip lower, and then that's when they're going to really struggle to raise capital a second time round, from shareholders at least. They might be able to get it from elsewhere by persuading the likes of Hyundai, UPS and other investors like BlackRock, etc., and hedge funds that they can deliver. That's fine, and they might take on debt that way, and that might help the projects. But raising capital from us shareholders is going to be really difficult if they don't deliver against what they're setting out here. And that is exactly it. It's extremely expensive at the moment for this company to run itself and not make any money. The immediate priority for this company is to get some revenue generated so they can reuse that revenue and boost the growth. So they're trying to do a battery module side of things as well, and they just seem to be spending money hand over fist over fist. And I know that they've got 404, or had at least 440 million available, but they're burning through that at a ridiculous rate. And if they don't start generating revenue in the coming quarters, they're going to be going back cap in hand to investors, which is really, really frustrating, because I think if I can see this, surely the management can see this coming. So why didn't they just focus on just the two things that they initially got the ridiculous market cap that they got for? Why have they not delivered on that instead of working on a car a bit earlier than they needed to, or working on other things? They could literally just focus on what they needed to. They've still got R&D to do, they've still got battery assembly, and they're trying to build these vehicles in a completely different way, which is exactly what's going on. Here is that they've got like ridiculous price targets that they need to now start delivering against. They've got some buses out for testing as well, as we've seen there. That is really good. You've got some people taking the mickey there a little bit, but the most important thing is they're reinvigorating the way that you build these vehicles in-house. So there's not going to be a big production line, so every single step in the process is innovative, and that will eventually be good. That is why it will come to fruition, and I do believe in it. I just wish they'd concentrated singly on the van and the bus at the same time and just got that sorted before moving on to other things. I'm sure other investors will share my sentiment about that. The $4 share price is now looking remarkably cheap, but it can easily go lower. It still has a $2.5 billion market cap for a pre-revenue company. And as we know, the EV sector, the market as a whole, has been absolutely hammered, especially with growth stocks at the moment. So you've got to be prepared for that, and the company should be sitting up and taking note of that and really focusing on delivering against what it has promised in Q3 2021 and Q4 2021, and getting these factories online is absolutely imperative that that happens. I really do hope that happens as an investor, but it is kind of out of my hands. I've got to sit and wait for Arrival to deliver on what it has said. Even though it has adjusted what it said it's going to do accordingly to be more conservative, it still needs to deliver against that for us investors. Thank you very much for watching again today, guys. Absolute pleasure as always. What do you think of Arrival stock? Do let me know in the comments below. Thanks for watching. Catch you in the next one.